Hey, good morning, everybody. Another good opportunity to trade some currencies. It's the beginning of a new quarter, as you know. What is it? October what? October 12th, 2018. And earnings season has begun. And this is when things start getting really interesting. Maybe the Santa Claus rally starts today, huh? So, anyways, great time to be a currency trader. Probably any trader. Probably a good time to be a commodity trader. Probably a good time to be an equity trader, bond trader. Just sell. But anyways, lots to be thankful for. So let's go. So anyways, hey, welcome to the Forex.Today YouTube channel for our daily Forex trading strategy session. If you'd like to be invited to these live webinars that we host every day, just click the subscribe button, and when I hit stream, you'll get a ping on my cell phone goes ping, and if you want to attend, you just go, it brings you right into the webinar live. I encourage you to ask questions, get involved. If you want me to cover a particular currency pair, let me know. If you want me to cover gold or oil, let me know. If you want me to talk about fundamentals, so I talked a lot about fundamentals and professional strategies yesterday. Today, I just want to bang out some technicals, go. But you're the boss. I'm a humble currency trader, so you let me know what you need to succeed. In fact, these webinars are here for you to succeed. Trader's Way wants you to succeed. That's why I do these webinars. If I can give you the skills that you need to acquire to develop confidence and consistency in your trading, maybe that profitability will soon follow. And when you get ready to trade real money, maybe you'll choose Trader's Way as the prime broker for your successful Forex trading business. And you'll do that simply out of loyalty and respect for these webinars, because we made this investment into you up front. We want you to succeed. That's why we're doing these. So your success comes, and then the raison d'etre, go to tradersway.com and open that account. Otherwise, your mother's going to be terribly, terribly disappointed. We're your ally. We're your friend. We want to work with you. Let's find some success, huh? And by the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for Trader's Way. So again, thank you for the thumbs up you give me every day. Thank you for all the positive comments and all that kind of stuff. I get a lot, and it keeps me strong. Well, yesterday I only slept 3 hours, but my loyalty and respect for you gets me out of bed when I would rather stay under the covers. So you make me want to be a better trader. And I work hard for you, so I appreciate what you do, because I know this is all about hard work. So namaste and thank you. All right, so without further ado, oh, you know what? I never did the disclaimer. Bad boy. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You like that one? Let's do a different one. Welcome to Forex.Today. Let me remind you that the purpose of this presentation is education. This is not learned service. I'm not here to make trade recommendations, but I will conduct technical and fundamental analysis, and I'll do so in real time, bit by bit, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Trading is risky, not appropriate for everyone. All right, cool. So let's get going. Euro USD. Let me get rid of this. Well, you know what? I'll leave it there because it was our old trade plan. All right, take a look at this. So we had questions, I think it was just yesterday, like, it's the end of the world, the stock market's crashing, what's happening, Wayne? Why is the world freaking out? And my response was, Nobody's freaking out. No professional's freaking out anyways. Dude, it's the beginning of a quarter, new quarter, right before earnings season. It's time to rebalance. Why are you freaking out, right? And here's great evidence of this. The Euro USD is something like 30 or 40% of the entire Forex market. It's huge, right? I forget what the exact statistic is. You could go to, oh, what the heck? I have BLS stuck in my head. You could go to the international settlements, the Bureau of International, no, Google it, the international settlements people. Gee, I can't remember. I got BLS stuck in my head. The Bureau for International Bureau of International Settlements. What the heck is their name? Is it the BIS? Yeah, I guess that's why I have BLS stuck in my head. The Bureau for International Settlements, right? Anyways, they'll tell you what percentage Euro USD is, and it's huge. So anyways, it's a lot. So this is great because there's so many types of market participants involved on this Euro USD. It's not just speculators. It's not just traders and day traders like us. It's not just hedge fund managers. It's not just CFOs and bankers and all this stuff. It's everybody. So it's as pure as the driven snow, right? It's full of angels and devils. But you get a real price, right? Now check this out. Let me give it an extra click. The bottom for this week is the S1, okay? So what did we talk about on Monday and Tuesday the likely upside if you're a bull would be? And I'll answer that question. We said, well, based on that technical, remember, it's not opinion, it's just technical analysis. Based on that, right, we would expect this to be the top. Well, oh, snap. You're like, so I look at this as, I don't know, anecdotal evidence or something. So I go back to whoever said, you know, the market's crashing, it's the end of the world. I'm like, dude, look at that. Nobody's freaking out. It's like awesome. The bulls are doing what bulls are supposed to do. Bears are doing what bears are supposed to do. And pigs that are just running around squealing and making noise and stinking up the whole place, they're getting slaughtered now, right? So I think that's cool, right? I think that's cool. I'm like, look at that. Nice. Okay? Now, even if it goes back up, it still tells me people are playing these numbers and they're not freaking out at all. It's completely logical. Okay? Now, right? Now, take a look at that. Amazing. Okay? Anyways. So, what do you want to do? You can take it down, take it up. Depends if you're a bull or a bear. If you're still bullish, you know, the way that the texts read, at least on this time frame, is if it's going to drop, it's got to do that first. Okay? And if it's going to rise, it's still going to rise about that price. Aight? Cool, right? I love it. Love it. Because that tells me not to freak out. So thank you, market participants. Right? Thank you, market participants, for giving me. All right. So let's take a look at this. Another random walk down Wall Street, right? Does this seem like the world is freaking out to you? Let's zoom out. And we identified this, is it fair to say 2 weeks ago? We were talking about it down here, right? Like, not this Monday, the Monday before. Right? Remember, we actually set up this long, and then we had it dropping down here. So it went up, and instead of dropping 50%, it only dropped 40%. And then it went up and hit the target, which we figured would be the target. And then we looked left, we had all this resistance. And then we looked at the monthly pivots, clustering with the weekly pivots. So we said, oh, snap, it's probably going to come up to about here and then drop. Now remember, we got the US dollar involved here, we got the Canadian economy involved here, the US jobs report, the CAD jobs report, oil stuff going on, geopolitical risk, we got hurricanes cutting off supplies in the Gulf of Mexico, and the result of that, it went up to the exact pip, dropped, double topped to the exact pip, and then dropped again. Yet our analysis predicted that 1 or 2 weeks in advance. And on top of all the chaos going on, the worst hurricane to hit the United States continent in 50 years, and it didn't even move the US dollar, Canadian dollar pair a pip beyond our plan. Nice. Freaking out? I don't think freak out. And by the way, I'm driving at 3 o'clock in the morning through a hurricane because that's what I do. It's cool, right? Yeah. Right? I know, right? See, I'm working on my American accent. 20 years ago, I was trying to work on I know, huh? People would say that, huh? What is that? Did you just grunt? America. So anyways, cool. So, message. I want to make sure this is received. The market doesn't freak out unless missiles are in the air. You understand? The only people that freak out are people that don't know what's happening. Okay? The only people that freak out are people that don't know what's happening. So if you feel like you want to freak out, just tell yourself, there's a gap in my knowledge, and I need to address that. And you know, you might think I'm being facetious here, but this is how I used to work. So let me go back 20 years ago. I couldn't find any books to teach myself how to trade. So one of my early ideas was I would write a book for myself. Now this is before like writing the strategic and tactical Forex trading book. This was actually like I'd write a textbook for myself, right? So I wrote down the things I thought that I knew. And then I researched them further so that I could be an expert. Things like, what is MACD? I started playing around with MACD. What is MACD? I literally what is MACD? And I searched and searched and searched and searched. And this was, again, even before Amazon.com sold things other than books. It was a new online bookstore. Amazing, right? YouTube hadn't been invented yet. Like, no joke. This is a long time ago. Anyways, I do some search somewhere. And somehow I get a hold of a Gerald Appel tape. A tape and a photocopied copy of it wasn't like sort of like handouts from a conference he did in the 1980s. The inventor of the MACD did a seminar in the 1980s, and I bought a tape of it and a photocopied version of the workbook, and I started to learn MACD, that kind of stuff, right? Anyways, so I started mastering the things that I thought I knew or thought I wanted to know more about. And then through the research, it would say things like, oh, well, you know, this is a little different, you know, this oscillator is different from other oscillators. And I'm like, oh, well, what the heck is an oscillator, right? MACD's an oscillator? So I'd write down things like to do. What is an oscillator, right? And I'd have this big checklist. And then, so on my free time, which, remember, I was a venture capitalist, I didn't have that much free time, but I'd wake up in the middle of the night to trade and to do research. So I'd flip over and I'm like, what is an oscillator? And I'd start doing research. And it would say, well, there are, you know, multiple different types of oscillators like RSI, right? For example, like stochastics. I'm like, oh, cool. So so then I'd research, what is RSI? What is stochastics, right? And I'd go from there. And it would lead me to this and lead me to that, and all of a sudden I'm writing the textbook, right? But I would actively seek out things I didn't know. Just as a way to do research to like, well, maybe I need to know this, maybe I don't need to know this, but it's a way for me to build my repertoire, right? Okay, so you see what I mean? So if you felt like the stock market's down 6%, you should freak out. Write it down like, try to figure it out. Just, I don't know, use it as an opportunity to grow. Because let's say 15 years from now, you're filthy stinking rich, you manage a huge hedge fund, and you have lots of clients, and you go through a situation like this. Remember, 3 weeks ago, I told you to develop a teachable story. Why would I tell you that 3 weeks ago? Okay, 15 years from now, your clients are freaking out. You got many millions, tens of millions, hundreds of millions of under management. The stock market comes down 6%. Your phone's ringing off the hook. People are freaking out. What are you going to tell them? And you say, it makes sense for you to freak out. The stock market's falling. It seems out of control. You got all this political stuff going on. Everyone, you know, all the talking heads on TV are telling you the recession's going to crash and all this, you know, everything's going to come down, and you're freaking out like you're thinking 2008 you're going to lose 50% of your net worth. And these are all valid concerns that you should have when you're investing. But let me tell you what I think. Let me tell you what my experience has shown me in situations like this. Let me share you a lifetime of wealth and knowledge that I've accumulated by sitting at my desk, being plugged into the market every minute of every day and deciphering the news, both news, but also economic data and how that comes together into an investment strategy that not only looks to make profit, but also mitigates risk. And then you tell the story. You tell your teachable point of view. And you educate your clients not to freak out. And you say, by the way, if it does fall, I will freak out. If it does this, this, or this, I will freak out and I will protect you. Okay? This is what I told you 3 weeks ago, maybe 4 weeks ago. Did you do it? I don't know. That's up to you. Right? What do they say? You can lead a horse to water, but you can only kick it in the ass? Oh, wait, that's a donkey. Forget it. Yeah. Anyways, so once again, I look at this and I'm like, oh my God, this is like to the pip. The market's not freaking out. So if you're freaking out, you need to ask yourself, why am I freaking out if the market of professional traders are not freaking out, right? Cool. Check this out. Ba-ching, we hit our target. Woohoo! Bum, 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 bum. WGI went down. Boom! Hit our target from last Wednesday. Right? You see? It wasn't even the M1. It wasn't even the S2. It was the central pivot in between. We had 71.25, right? Now I went a little farther. What am I going to do? It hit the S2. But, you know, this is sort of like splitting the law of averages. If you still got out at the central, it would have been about the same price where we're at now. So, again, law of averages. But chickadee, check that out. This was rallying up. And for some reason, we had the break set here. And we figured down, right? Lower low, lower high. This is plan A. This is plan B. And down. Nice! Charles Binder says, Wayne, will you talk about how the new setup is coming? Charles. No, I don't want to talk about it. You know, it's funny. I'm so busy. I just don't even have time to deal with it. I just don't have time. It's good. It's fine. I'm taking some stuff down. I'm putting some stuff up, but I'm super busy. I mean, oh my God, I was doing homework all last night. I slept 3 hours yesterday. So I do a lot of planning over the weekend. Like I am grateful for my swing trading group, for example, because it forces us to get together when I could super easily just push it off. And, you know, this is bread and butter stuff, right? So, like, after today, we're going to meet and go through this. MetaTraders, by the way, is going to do some kick butt stuff starting next week. We're truly going to expand that out. And I'm very grateful for that. Because, again, it forces some really positive things to happen. So if you're one of the portfolio managers, look forward to next week. There's been a crisis in my family the last 48 hours. So I've been distracted on top of being distracted, so I apologize for that. But nothing but good things, like a wave of good things are about to happen in those groups. You know, so, but like going back to the swing trading stuff, I love it where you don't need 18 screens to swing trade. You don't need 18 hours a day to swing trade. You need a real positive 30 minutes, right? But you have to do it at the right time and do the right thing. But, you know, you have to have, what, 30 minutes to an hour a week to do the trading or the trade planning. Now, maybe the trading takes a little bit longer, but you can use orders to get in, right? You could say, well, I'm just going to buy it there. I'm going to sell it there and put an order and then use the OCO to protect yourself. But anyways, maybe this is a lesson too, where you should departmentalize your life. And I've recommended this for many years. And it's funny because I remember I couldn't pronounce it 5 or 6 or 7 years ago. But same advice. You should break your trading down into departments. Okay? And you say, at this time on this day, I'm a swing trader. At this time every day, I'm a scalper. At these moments, like, you know, I'm doing news trading. On this other thing, I'm carry trading. Maybe you have different accounts for each thing so that you have to log into a different account. And you say, well, what's the major upside of that? And the major upside is intent. So one of the things that's probably harming you is if you just boot up your account, right, and you start looking for a trade. If you find that you're doing that, like, oh, what are we going to do now? What are we going to do today? You've already lost all your money. And on top of that, if you're pretty decent as a trader, it might take you all a year to lose your money. So you lost a year of your life and you lost all your money. But it's the attitude or the process of you going, I wonder what we're doing today. Let's go look for a trade. That's where you lose, right? So one benefit of saying, okay, Friday at 9 a.m. I'm looking to front run swing trades. Right? That's when our group meets. Then you open up your swing trading account and all your swing trading charts are there and you're looking for very specific things, and it's called intent, where you're looking for things specifically and you filter out everything else. And it's really important. And if you don't get swing trades on Friday, then on Monday you're kind of looking for slightly different things. So again, you open up your swing trading thing on Monday morning, or for me it's Sunday afternoon, and you're like, okay, where did we open? Did we gap? Did we not gap? What price are we at? Where would I like to be? What is my bias? And you put it all together and you're like, okay, I'll get it now. Or you're like, oh, maybe it'll come in around London Open. And you mark your lines and you get your prices. But it's very, very focused with pure focused intention. And everything goes away besides what you're doing. And then once you set up those, you shut down that account, right? You close it, and now you don't think about it anymore. You already got your prices and all that. And then your day trading account might be different. And then you open up that one, you're like, okay, where's London going to open? Where are our daily pivots? Do they overlap with the new weeklies? What's going on? What's on the calendar? This kind of stuff, and they're completely different questions. You got it? Intent. But anyways, I think you can see this was what we planned and we got it. So what's going to happen now? I don't know. We put together a drop from $77 to $71, right? That's a $6 drop on one futures contract. That's $6,000, right? $6,000 per futures contract. So that's 600 pips, right? Yeah, but you'll say, Wayne, that took like a whole week. Oh, I know. Now, the funny thing on top of that is we had this going up the 2 or 3 or 4 weeks before that. So we had it going up week after week after week, and then for some reason, we had the drop. That's even more important, right? So, coolio, right? So, are we at support or are we at resistance? What should you be doing here? I'm interested in this price. I'm interested in 69. Whoa, be careful what you, be careful what you say, right? Right? Anyways, no crude jokes. Yeah. Anyways, that's because, well, you know what? Let me override that. Whoa. I'm going to override that. Hold up. I was looking at this as an R1, but of course we stretched this out to the M4, of course, right? All right, so M4 is in control. That makes an M2, and we might have already hit it. So you know what? If you're a bull, this is IE. Now, you still would think that maybe 70 is in play, but it came down to 70.5, didn't it? What did the actual price come out to? Let's drop into a 15. Let's mark it. Yeah, 70.35. You know what? That might be good enough for the girls I go with. So, how are you going to play this? I guess you could do this as plan A if you're a bull. I'm just looking at it as a bull now. Plan A would be a bull back to 75, 76. Plan B for a bull would probably be maybe like that. And we play it like good enough. Well, you know what? Just for fun, let's plan it like this. Just because it's a possibility. And you'll say, Wayne, that's a lower low. And I'm like, well, it's an Arctic turtle. So we just have to compromise a little bit. So I plan for the worst and expect the best. I don't know if that's true, but if that's right. But anyways. Okay. Can you mention any, well, I missed that, and I don't have the chat. Can you, there was a question about pivot points. I'm sorry, I don't have the YouTube chat open. I'm actually looking at it on the broadcaster because I've integrated the chat into so I'm actually looking at this thing here, which will actually be in the video. So I'm not even on the YouTube page. Somebody asked tips about pivot points. Take the swing trading course. It's something like 16 hours. You will master pivot points. In not just pivot points, but pivot points with a particular strategy behind them. So that I would recommend that. If you're new to Forex, however, you probably want to do the basic training program and the price action. Okay, so that's where you want to start. Basic training program, price action. And I bundled them together, actually, so they're like, I don't know, 50% off or something. So the bundle's on FX Bootcamp. And it's really like the first one, the basic training one, is like, I don't know, 9 hours of like what is support and resistance, what are moving averages, what is a pitchfork, what are pivot points, how do you manage stops and risks, all of that, like truly the basic training, the foundation. And then to add to that price action, a whole price action course, that's a really good place to start. Because like, why go to the swing stuff and the pivot stuff if you don't even know how to trade? right? So you need the foundation, and then you put the price action on top of that. Great. Now you know how to trade. Now you need a strategy. Pivot point swing. Because now you need a strategy behind your tactics, right? So I would do the tactic stuff first and then the strategy. So that's what I would do. I'd do the, I think it's a new trader bundle it's called, and then I do the swing trading course. Okay. Kevin Starr, like pitchfork? Yeah, I call them Pegler pitchforks. I couldn't believe it, actually. I was asked to speak at a conference. I didn't respond. But anyway, so I went to the conference website, and there's a guy there from 20 years ago. His shtick was like pitchforks. That's what he did. Right? You got to have a niche, right? He was a pitchfork guy. And he's still doing these conferences. I'm like, oh my God. He's still doing these conferences. Can you imagine going to 5 or 6 or 7 conferences a year for 30 years and you're doing the same thing? Holy crap. I couldn't take it. I only did it for 2 or 3 years. I had an epiphany, though. And some of you old guys might have this, remember this story. I was really struggling because I went to, like I said, I went to the New York show, the Vegas show, and probably 1 or 2 other shows. So I went to like 3 shows a year, I think. I couldn't imagine doing more. And I had a giant booth, and and I was spending, let's say $100,000 per show, sometimes more, sometimes less. But it was a big deal, right? And it took a lot of planning and a lot of time and all this kind of stuff. And I was coaching at FX Bootcamp, and I was trading and managing my fund and all this kind of stuff, right? And after about a year of this, and I had young children, and I'm like, I'm not sleeping again. I'm not sleeping, right? And I'm like, this is so difficult, right? So difficult. Then I wrote my books. I launched the book. I'm like, I'm freaking out. I'm struggling. I'm like, this is so hard, right? And there was another person I noticed that was, I was writing magazine articles and stuff, right? And this other person was writing like for 5 different magazines, and she was at every one of these shows. And anyways, they were selling my book at one of the conferences in the expo area, right? There was like this guy that had these bookstores, and you could do book signings, right? So there was an issue. Maybe I was doing a book signing or something, but I went there early. I had to talk to this guy, and there's a huge crowd around the table. He's selling all these books, and there's a different author there, kind of like signing autographs. And so I'm trying to talk to the guy in charge of the bookstore, and there she is, the woman that's like writing all these magazine articles. She's at like every show. Like, I'm only going to 3 shows a year. She's at every show, right? And doing all this stuff. And I'm like, damn, I can't even do 3 shows, right? So I go up to her, and I'm like, hey, I'm Wayne. I'm an author from one of these other books. It's nice to meet you. And she shakes my hand and stuff. I'm like, I really have to give it to you. I don't know how you do it. I'm like, I trade, I'm trying to raise my children, right? And I got my group, and I got these books, and I'm trying to do these shows, and I'm trying to write the magazine articles too. I'm like, I'm trying to do what I think I'm supposed to be doing to be a success. I'm like, but it's so hard. I just can't do all of this and trade. And she laughed. She's like, well, I don't trade. And I just melted. Like a wet paper bag in a monsoon. I just went, oh my God, are you kidding me? Like, you're joking. That's why I can't do it. Like, so I quit going to shows. I'm like, that's it. I can't hang with these people anymore. I just can't do it. No wonder. They just market. So anyways, I'm like, that's what they sell books. And they do seminars. That's why they do it. I'm like, oh my God. But I can make 1,000 times more money trading. So I'm like, I quit. That's it. I don't do expos anymore. It was devastating to me. I'm like, oh my God. Oh my God. So anyways, there's my life. Sorry to get distracted. Hey Wayne, I did get the profiles of it. Hey Wayne, I did get the profiles. I've been waiting. I guess you did not. Yes. So, like I said, I've had a crisis in my family, near-death experience. I'm distracted, but I have fired the old programmer. I have hired a new programmer, and I'm going to have to rebuild it, the whole thing, spend thousands of dollars of setting it all up. That's okay, because I know I'm making it a little more complicated than it needs to be, but I look on the long run. If you can hang for like a week, I'll have a new system so that the other 18% of people that can't download for some reason will be able to download. So you need to be patient with me. Okay? No, Martin, I'm going to have to come up with a plan B for that. I'm sorry. It wasn't me. It was complicated. Okay, I'm sorry. All right, so we did this. Okay, got it. Guess we probably should set that up for later. Yeah, we'll do that. Aussie yen. Okay. Big sell-off really had our impact. Remember, we said if you were a bull, remember if-then statement, cause and effect. If you were a bull, this is your price. So price came down on Monday. There's your price on the day. Is it acceptable to buy this 1, 2, 3? And somebody else pointed this out to me. I don't remember who it was, but you remember how I ignored it? And somebody else says, well, isn't that a hammock? And I went back, I'm like, well, yeah, it could be a hammock. And so we kind of priced it out. So if you were going to do it that way, you do it this way. But for some reason I didn't point it out. So I don't know if that was dumb luck or not. But anyways, it failed, which is fine. You're going to have losing trades. That would be one of those good losses. Because in this situation, if your plan is to buy it at a weekly on a Monday or Tuesday with a 1, 2, 3 reversal pattern, by all means do it. Oh, it was Brooke? So it's one of these things, Brooke, like if you took it, so you made 10 pips. Okay, good. That's good risk management, by the way, Brooke. If you took that, that's fine. Even if you lost money, let me say it this way. That's how you're supposed to lose money. If you're going to lose money, buying at support with a double bottom high is the right way to do it. And that's why they invented stop losses. Okay? But also, maybe this is one of those things too where if you create a career of buying reversal patterns, the problem with buying reversal patterns is you're essentially betting or using technical analysis to analyze potential reversals. But, you know, Uncle Wayne would rather you create a career of trading trends, not anticipating reversals of trends. And when you get unlucky, it's going to be unlucky because it did everything it was supposed to do to reverse, except reverse. That's why it's always better to trade in the direction of the trend. But that's a good loss, Brooke. That's the way you do it. Good job. Okay. Is this a good opportunity to buy now? No, you're very late. Is it a good opportunity to sell? Well, they're not amazing prices, but if you were going to sell, yeah, sure. Yeah, you definitely could think about it, right? If you were going to be a bear on this, oops, that's not what I meant to do. I would have it marked like this. Okay. So let's say we'll go with that. And then let's get rid of this. Get rid of that. Get rid of that. Oops, move that. Okay. So I would look at it that way, right? Now I gotta grab this. You don't want to be this high on a reversal. You could, you just don't want it to. You could see we're about 618, but it's not perfect. So what that tells me is nobody's actually using Fibonacci on this. So I'm going to just delete it because you're going to get confirmation bias. Are we at some sort of level of resistance? 80. Okay, so could you sell near 80 if you were a bear? Near the New York Open? Yeah, totally. So let's mark it like that. Once again, you're sort of nomad's land, but it's okay. It's okay. It might go higher. It might go to 80-30. 80-50 doesn't seem right to me. So, you know, if you were a bear, yeah, I think we're going to monkey around with the psych level. New York's going to open and you take it down. If you're a bear, that's how I would think about it. Okay. Again, I'm not telling you to be a bear. You need to already be a bear or already be a bull. And this is not, buying at 80 is not bullish. Okay. So if you were a bear, yeah, you need to plan this out. And it's happening now, right? So what's your plan, Stan? I put your trade plan on the wall, and it reminds me that it's not so bad. It's not so bad, right? So anyways, somewhere in there. Looking at it on a 5-minute chart, would you say this is telling you bullish market, bearish market, or sideways? I would say sideways. So the other way to mark this on the short run is you'd mark that as a top, and you'd mark this as a bottom, and you could also do the breakout, right? Lower low, lower high, sell it. That's your call. In a scenario like this, because we've marked a high and a low, that means there's no market. It's sideways, so you can kill those indicators. If there's a sideways market, there's no trend, so you can kill that. You can keep your 5A cross if you want. You could use an oscillator like a stochastics if you want. That's cool too. But the most important thing is support and resistance. Okay. My guess is if I had a stochastics, so a stochastics measures the candlesticks relative to the previous ones. So this is way overbought, right? And then over the 80%, over the 90%, this kind of stuff. And by now, it's actually rolled over, right? So you get the cross. Now it's back into the trade zone, so it's come back down. And so someone would have sold it up into there, as you can see now. And that would be the birth of your short, for example. Okay? All right, Timeless Bean. Okay, we get your point of view. Thank you for sharing. No more, please, or I'll boot you. Because that's cool. That's fine. But this is a Forex channel, so if you're here promoting something else, please disappear. But you're welcome to stay and hang. Just, you know, enough with whatever you're doing. All right, so what do we have here? Pound dollar. So this goes back to last week. Let me get rid of this. Okay, we have this huge gray zone. Do you remember what that is? The huge gray zone was the buy area for the month of October if you were a bull. Now, the interesting thing is the week or two before, we're not terribly bullish. Okay, so I deleted that, right? Let me kind of move this out of the way. I guess I should put this back. This was the first expansion target, which we've now hit. I guess we'll leave it there. That's the first expansion target. I think what I had done is planned it as an inverse head and shoulders for you, but you know, I think someone must have asked because I don't actually plan it that way. But anyways, that's cool. So what's happening here? You have to have a bias and you have to have a strategy. So if you happen to be a bull on pound dollar, right? You understand, like, there's nothing in the world that would necessarily point you there. Okay? Right? But you have the bias. You want this to go up. I don't care how you came to that conclusion, but you made the decision. The decision is what you need. How you get there doesn't even matter. But if you happen to know you're a bull, it tells you a couple of things. First and foremost, that you want to buy. And second of all, you want to buy at support. So now all you have to do is say, well, where's the support for me to consider buying? Okay? And then once you have those, now you have a price. Now you look for technical analysis, things like reversal patterns or crossovers at or very near your price. But you start with the bias, then you search for a price, and then you use technical analysis to enter. So that creates a strategy, right? Tactics and strategy. Tactics being technical analysis, strategy being bias and price. Okay, great. So we said 2 weeks ago, it's the beginning of October. If we were a bull, where would we want to buy? And the answer to that was somewhere in this gray zone. How cool is that? Okay, and then particularly what we have is this price, 129.10. Right? Got it? So from there, you use technical analysis. You got your price, now you got your bias, and for this person, they did well. They made money, okay? What is the target? Now, this probably goes back to the swing trading group last week. What is this? We did this on Sunday, right? What is this? Let me zoom in. Right? You got to realize, oh, I have to zoom out. I drew this line 5 p.m.-ish on Sunday afternoon. We were here. Actually, you know what? No, I can see it. It actually gapped up, right? Okay, we were here. And the plan was, as you can see, if you're a bull, right, you want it to drop, because you can see I have the buy here, 130.50. And the target, that's what this line is 132.18. Okay? Now, of course, if you're a bear, you would have sold this. But selling a higher high is kind of strange after a bottom. And remember, the reason you're a bull is you were a bull here, so you bought it here, made money. In your second week, now you just come up with the next swing trade, right? This is just a very basic swing trade. But here's the interesting thing, though. Both on a monthly and a weekly basis. So whoever bought down here likes this big, thick black line. But whoever is a weekly trader likes this area. Let me actually highlight it. The weekly long is actually here. Okay? So you can see it's straight down in the middle. It's perfect, right? And the target, the conservative target is 130.18. The aggressive target is 132.53. Look at that. And guess what? It's coming down. Why is it coming down now? Why are we not making higher highs? Because whoever bought it here knew that that was the target, and they've taken profit. It's like, yeah. Yeah, of course. Whoever bought it here is taking profit. No, why are they taking profit? Well, that was the plan. On Sunday. Think about it. I mean, come on, especially the newer guys. Think about it. The plan on Sunday was let it drop to buy it. And then ride it up. This was the plan on Sunday. Ride it up to 132.50 and then take profit. So this is why I say, like, if you're opening your charts and you're looking for your trades, like, what am I going to do today? Oh my God, you're going to lose all your money. What are you talking about? Again, you're trading like that against somebody that says on Sunday, I'm going to let it fall. I'm going to buy it, ride it up to a specific price, and then take profit. That person has strategy. That person has patience. patience. That person has intent. That person has discipline. That person has a plan. And you're just going to wing it against a person like that? Good luck. Good luck winging it for the next 20 years every day. I mean, just think about the likelihood. Can you possibly just trade by the seat of your pants, using your gut, winging it every single day for 20 years? Well, good luck with that. Maybe you have a magic gut. So anyways, I love that stuff. I'm like, boom, that's what we did on Sunday. It was hard because on Friday we had non-farm payrolls, and I was tired after talking for 3 days, so we had to wing it on Friday. And so, again, do we know it's going to go up or down? No. Can you guess? Sure. Can you have a bias? Oh, for sure. But let's make it simple. If you were a bear on Sunday, you would have sold this. And if you're a bull on Sunday, you would have waited for the dip. Easy. You just need to know which one you are. Now, if you're a bear, you sold it around, what is that, 131.20? So let's say 131. And it dropped down to 130.50. So you only made 100, 150 pips, but you were wrong. That's how you're wrong. You're sitting and waiting, and you're there at exactly the market open on Sunday, and you're like, aha, hit my price. Just like this guy on Tuesday morning said, aha, I've hit my price. And what does everyone else do? I wonder what I'm going to do today. But the other guys are saying, aha, I hit my price. I know what I want to do. I have intent. I have a plan. I have a strategy. Right? So. Buy. And everyone else is like, I wonder what's going on. You got to change that. You got to change that. You should be able to tell me what you're going to do tomorrow. If you're figuring out what you're going to do today, you've lost. You should be planning out tomorrow. Right? You see what I mean? You should be planning Monday. What does the swing trade group do on a Friday? Plan Monday. We plan out what we're going to do Monday or Tuesday. Not just like, that's just the entry, but then we're also planning out what we're going to be doing Thursday or Friday. No joke. On Friday, we're planning probably up to 4 or 5 days in advance. What, right? That's how you trade successfully. And if you don't know how to do that, then you have resources to learn how to do that. Remember, I'm not preaching that, I'm right all the time. I'm preaching that you need to plan all the time. And that, if you lose, you need to lose with style. Or like Brooke, lose with profit. Or like I just showed you, that swing trade. You were totally wrong, bro, but you only made 150 pips. Profit, that's where you want to get. And of course, as a bear, you knew exactly where you were likely to get knocked out, so you could manage your risk. It's not like, well, I didn't foresee it, rising back up. You're like, you didn't see the weekly M2? You didn't see the monthly central pivot point off of last week's double bottom? Like, what, are you blind? Right? Like, it's there. So like, well, this is where I'm going to be challenged. I know there's going to be bulls there. I'm up 150 pips. Maybe I should move my stop, right? And that's the cool thing, is you can do that. You know it. You don't have to be a rocket surgeon, right? Right? Peter Ward's interested. Yeah, all that stuff is great, right? Brexit, those are big fundamentals. So it's not necessarily the individual news, because that's just people kind of reacting to the individual news. But when there's a real policy change, right? Like, because of Brexit, not talking about Brexit, not speeches about Brexit, not rumors about Brexit. All of those can move the market, but, you know, shorter term. But if Brexit happens and we know that trade between the UK and Europe drops 22% because of the hard break, that's a fundamental change. That trade stops by this X amount, and you're like, oh. Okay. Now, all the other things can affect things short term, but if it's like, well, for the next year or two until we, you know, fix these things, trade between these two countries, aka money flow. See, we care about money flow, right? Let's meet at like 9, okay? Let's meet at 9 o'clock for the swing trading group, okay? Meta traders, we're going to meet a lot next week, so portfolio managers, get ready for that. Again, I was going to make a big announcement today, or not today, this week, for the swing trading group. Sorry, I'm not getting enough sleep. I was going to make a big announcement this week for my portfolio manager group, meta traders. But I got sidetracked with this family crisis, and I apologize. So next week, okay? So lots of killer stuff. Don't worry about it, Kevin. If you don't know, you don't know. It's okay. All right. Yeah, okay. Let's bust through some yens. USD yen. Oh, look, it fell to our target. Nice. Now, it looks awesome, right? But what's going on here? All we talked about, guys, was support and resistance. We said, look left. Yeah, if it falls, probably fall into here. That's all. Very, very, very doable. Very, very, very plannable. This up here is if you're going to try to, sell, you could sell. But this, when you get overextended, it doesn't usually come all the way back. So like this would be this is me doing price action, right? Down, 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 up, up, sell. That's easy. Down, 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 up, up, sell. That's actually a swing. So that superseded the price action, right? Down, 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 up, down, right? This is overextended. So typically if you're just just price action trading, it's supposed to come up here. Well, this is a swing trade, not a price action trade, right? So we're kind of in that situation too, overextended. So what do you use if you're going to try? And, that's where Fibonacci is really helpful. So it made a 50% retracement and dropped, right? What's happening now? Made a 382, okay? So it just depends if you're still a bear or not. And if you're a bull, of course, what you're looking for is consolidation at this gray zone and maybe a move up. But I find this very difficult, these setups, because look at the target. The only thing I could plan on is this green zone, and we're way down here. So that's gobbledygoo, okay? That's gobbledygoo. That's very difficult to trade, okay? So when I say it's very difficult to trade, that's a higher level of risk. Okay, then I add on some additional tools, and now I say, oh, now I know why it stopped here. Okay, you see what I mean? Okay, and that's why I use pivot points. So if you're trading weeklies, you're like, why are we way down here? And then you trade monthlies, you're like, aha, that's exactly what's going on. And remember, it kind of suggests like we got halfway to R1, so wouldn't it be goofy if we made it to halfway to S1? But I don't think that way. So we triple bottomed at the M2. So what I would like to see is an upward move here. If I was a bull, I would like to see this. But if I'm a bear, what's the plan? Probably that. And did it. So, like, look at these plans, guys. Look at ZAR. Thank you, ZAR. This was the rise up. This was the fall down. Remember, plan A for bulls, plan A for bulls, plan A for bears. Both worked beautifully. Isn't that awesome? Right? Look at the tools we use for planning. That pivot point there. Now you might say, well, Wayne, it hit it once, it hit it twice, and this wasn't that good. Okay, fine. The real body is almost exactly, right? So I would argue that this is moving technically off of weekly pivots. But also notice I set up the second trade. How long ago was this? Was it Wednesday? But we had this lower low. So I said you take this, right? This is the old roll reversal area, right? So I say let it go up, and this is your sell, right? See this, and 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 this. These are 4-hour candles, by the way, right? Wick, 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 wick. Yeah, something's going on here, right? That's price action. Or you could say hammock as well, right? But like this is USD ZAR, guys. Is this 40% of the market? No. What percentage of the market is USD ZAR? But still, look at it trade so beautifully. Triple top on a monthly pivot, not just a monthly pivot, not just like there's so many random pivots so I could just say, oh, well, no, at the one you would sell. That's the interesting thing. That's straight out of the strategy, right? You take the swing trading course, I say, well, that's the one you want to sell. Triple top, boom. Okay, and then you take what? Price action. Right out of the price action course. Boom. Nice. This is ZAR. This is South African Rand, and it's beautiful. Cool, right? So where's the next trouble going to be? Well, you got this target down here, but you also have fib wars. And fib wars means a bull is going to fib it this way, and he's going to have a plan A and a plan B down here. And this is monkey in the middle stuff. This is sort of like nomad's land. I don't know. I'd walk away. I like selling high. I like buying low. And I like to stay out of the middle. But you can still anticipate someone's going to buy this and try to take it up. Okay? So it's not that it's going to happen, but if you're a bear, you have permission to, think about it. Think about taking profit. Now you're like, well, Wayne, I expect it to go all the way down. Okay. Okay, fine. You believe the ZAR is going to, out-muscle the USD and that you shouldn't even worry about where bulls are going to be? I'd be worried if I were me. So this is where bulls would be. Those are aggressive bulls, and the conservative bulls are going to be there. Okay? Do I know that factually? Like, can I see that? No. Like, for example, let me turn this off. Let's see if we can see the orders. By the way, I think we're going to have to wrap it up here. It's getting pretty late. Come on now. Is it not starting up? Well, I guess it's not going to start it. Anyways, I can't see prices. I just know how to trade. It's funny that I had it on and it did everything, but let me try it again just for fun. Quick deal. What else would I need to do? Allow deal, allow imports probably. Let's see if that helps. That's doing something. There it is. And well, that's why it's not populating. Yeah, so I can't see any orders. It's probably very illiquid for Trader's Way compared to like Euro. So anyways, it's beautiful stuff, guys. you got to get into trade planning. You just have to get into trade planning, right? You need to like really tell yourself, I cannot trade Forex like a video game. Boo, 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 boo. It's promoted like that on YouTube like crazy, isn't it? I just come in, boom, 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 look, I made $1,000 driving my yellow Lamborghini, boom, 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 boom. No, that's not how it works. So that's fun and it's very sellable. It doesn't work. So what you need to fall in love with is really planning things out. And you know, like, you know that beautiful guy on A-Team? What was his name? Face? And he loves a plan and he smokes a cigar. That's me, man, right? I love a plan. I love when a plan comes together. That's how you need to be the smart, good-looking, cigar-smoking member of the A-Team. Okay? You need to love the plan. So you're not looking to do something now. You're planning for something in the future because you only want to trade when you have an unfair advantage. Do you have an unfair advantage right now? You need to always ask yourself, if you put money on the table now, if you made a trade right now, would you be shocked that you didn't make money? Like that trade Brooke set up that I talked about earlier. Double bottom at a monthly pivot on a Monday with a higher high, set up the higher low, pull the trigger, and it failed. You should be like, what? How did that not work? Holy crap. A double bottom with a higher high, 1, 2, 3 reversal at a monthly pivot on a Tuesday at London Open and I didn't make money? What kind of weird topsy-turvy world do I live in? Like, cats are moving in with dogs and stuff. You're like, what is this? And you should say, well, what kind of idiot sold that? Well, give me my trade back. I don't want this anymore. I don't want to be involved in this market. Give me my money back. And then you walk away like, if you want to sell that, by all means, it's yours. But I'm taking a walk. That's what trading should be like. Brooke, congratulations. Brooke even made money. That's the world's greatest loss. That's how you're supposed to lose. You should be shocked. And when you lose, when you actually lose money, it shouldn't be a lot of money. Like, you shouldn't be like, oh my God, what am I going to do now? How am I going to cover my rent? Oh my God, how am I going to buy groceries? Oh my God. No, it should be like, what the hell, man? That sucks. And you walk in, it's like, you're mad that it didn't work, but it's not that big of a deal. You got a lot of trades going on, or there's tomorrow, there's next week. You're just shocked that you didn't make it on that one, right? And that's where we got to get you. You're shocked, not because you're a lucky son of a gun with the world's greatest stomach, trading by the seat of your pants, boo, 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 boo. Right? It's because you're shocked because it was such a beautiful plan with lots of logic, lots of intelligence, lots of technicals, lots of fundamentals, and yet the market just wasn't ready yet. Well, that's the market you don't want to trade in. And you just back up. You want to trade in the market where you're going to make money. And if you're not sure that, maybe this isn't the market for you to be trading. Maybe later will be better. Maybe the next day, right, will be better than the last. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a client of Trader's Way. If you haven't, please visit tradersway.com. Open up an account, even if it's a demo. Come on, man. You were here for a half an hour, 45 minutes today? Open up the account. Don't be a holdout machine, right? Kick down, come clean. Also, if you want to attend Monday's webinar, if you want to be invited, if you want to be in the Cool Kids Club, subscribe to Forex.Today. And if you're watching a video, why are my hands moving? Right, I'm like Ricky Bobby. I don't know what to do with my hands. If you're watching a video, if you're watching the recording of this, I don't know what to do with my hands. Leave a comment, say thank you, let me know what you want me to cover on Monday, and I'll do my best to get that done. Okay? So anyways, peace on earth. May the pips be with you. Or maybe I should do it this way. Whoa, let's do it this way. Peace on earth. May the pips be with you. May your profits be above average. Have a fantastic weekend, and I will see you on Monday. Cheers.